Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Here are the headlines. Indian markets trade flat, with India Bulls Housing Finance being the worst performer on the Nifty, despite the management refuting charges of siphoning off 98,000 crore rupees from the company. Open interest surges in just as traders take fresh short positions in the stock futures. And Sterlite Tech is up nearly 6% after the promoters revoke all pledged amounting to 52% stake in the company. And DHFL continues to trade in the red despite promoters selling their stake in Aadhar Housing Finance and promising to use the funds to repay DHFL's lenders.
Okay, those are the top headlines for you at this hour. Let's also tell you what's happening with the markets. It was a positive start. Then there was a bout of profit booking which kicked in at higher levels. But once again, Nifty is up in trade, currently trading above the mark of 11,950. The premium has been shrinking on the future side in the last 2 to 3 trading sessions. And as we speak, the June futures are quoting a premium of about 4 points. The open interest for the June futures is up only about 2%. Remember, there's not been any build-up at least in the last 2 to 3 sessions when it comes to Nifty or for the Bank Nifty futures. Bank Nifty, as we speak, is also sitting with some bit of gains, 31,142, and the premium for the Bank Nifty futures have also come down to almost about 10 to 11 points. Let's just have a look at the broader markets, which did slip into the negative territory, and right now also the small cap index is sitting with cuts of about 0.5%, though mild bit of gains seen for the mid cap index. For the larger universe, the market breadth this morning has been in favor of the declines, and there you go on your screen, almost about 1:2 is what we are witnessing. Sector-wise, Nifty, Pharma and Realty have seen some selling pressure this morning. These two sectoral indices have seen cuts coming about, but how should one position themselves in terms of options data? If you're looking at the maximum open interest right now on the call side is at the 12,000 and on the put side is at the 11,800, and this is for the Thursday expiry, and the range is pretty clear. We've been watching out for the range of about 200 points between 11,800 to 12,000. And for today's trading session, we've seen some bit of call addition coming in for the 11,950 strike and also the 12,000 strike. These two strikes so far have added the most of about between 2 to 3 lakh shares as we speak. The 950 strike has added about 3 lakh shares and the 12,000 has added about 2.5. Whereas on the put side, the 11,850 and the 11,900 strikes have added between 4 to 4.5 lakh shares. And remember, the Nifty PCR did slip a bit yesterday after the markets closed off day's high in yesterday's session. So let's see how the positions will be stacked up today. But for the time being, Agam, I think the range is pretty clear. Every time there's a pullback towards the 12,000 mark, there's some bit of profit booking which kicks in.
You're right, absolutely. And we continue to keep an eye on that one. Of course, for now, there is some sort of resistance around the 12,000 mark. But let's talk about stocks which are seeing well, a surge or perhaps a decline in open interest. And if you can have that list up, there's Repco Home Finance along with Reliance Infra, and both these stocks are losing, but there's a surge in OI. Apollo Hospitals and CG Power, among others, which are also seeing quite a bit of traction in open interest, and Manappuram Finance is also another one of these. So we keep an eye on that one. Manappuram Finance, of course, is seeing longs come through. In terms of stocks which are seeing a decline in open interest, we have PC Jeweler, which is in the F&O ban, as is the case for Reliance Capital. But this isn't as much a decline in OI. We'll keep an eye on that one. Look at PC Jeweler, it's up as much as 7.3%. And of course, this is considering the stock is in the F&O ban. So there's clearly a lot of traction in the cash market for now. We'll be watching out for these, other than the fact that we've also seen a lot of movements in some other ADG companies too.
Okay, so a lot of stocks moving around, but specifically there are a few stocks that we would like to take views from our experts, and one of them is Bharat Financial, which opened in the green today, and that's after NCLT has given approval for merger with IndusInd Bank. There is some bit of long position seen there. And HCL Technologies, remember the IT stocks have been doing well since yesterday, and HCL particularly is been trading above its 50-day moving average since yesterday. And the third one is India Bulls Housing in news, and the company has refuted allegations of siphoning off money, but there is some bit of correction which has come by after that report. India Bulls Housing is seeing some bit of shorting in today's trade.
Okay, well, we will get in our experts for the day then. Before that, Here's a reminder, if you have any queries regarding futures and options markets, you can call us now on 022-454-04141 or write to us on Twitter, Facebook with the AskPQ hashtag. Let's get in our experts then. We have Nirav Chheda of Nirmal Bank Securities and Amit Shah of Cap Markets joining us on the show. Good morning to both of you and thanks so much for joining in. Amit, I start with you. Your view on the benchmarks now, where do we go from here?
Good morning, Agam and Navneet. The biasness though remains positive considering the height of higher bottom formation what the overall index has formed. But there are a couple of observations which we need to see. First is on a weekly closing basis, Nifty has failed to close about 12,000 marks, so that's quite disturbing despite being hovering at the higher band. 12,000 has been struggling on a weekly closing basis. Overall, though last couple of days we have seen market reacting slightly on the positive side after the fall what we witnessed on Thursday, but the rise in the Nifty has been not supported by the overall market breadth, which continues to remain quite disturbing from last, I think, more than a few weeks. So till the time I don't see an improvement in the market breadth, definitely there is not much of a strength seen in the index. To me, as Navneet likely mentioned, the weekly expiry range of option what it is suggesting at 11,800 and 12,000 odd mark, that is a critical range to watch out for. However, the monthly spreads on the open interest front is still at 12,500 and 11,500 odd. But the call writers, if market does not cross 12,000 mark in coming few days, then I believe the monthly contract call writers also will see the positions getting built lower from 12,500 to 12,000 odd strike price. So that would be one kind of a confirmation where the market will fail to hold at the higher band, and on violating 11,800 odd mark we can see some kind of a weakness. So till the time 11,800 12,000 odd levels are not violated on a sustained basis, it is more of a kind of a time to price consolidation between this band. So I would be more of a watching at these levels how the call writers, how the market breadth, etc. is improving or not. And once this range is violated, I'll take a fresh bet on the Nifty view.
Okay, Amit, but you have a view on Nifty IT for the day?
Yeah, so to me, I believe Nifty IT can see a very good relative outperformance compared to the other tradable indices, which is Nifty and Bank Nifty. Now, Nifty IT has been quite steady since it corrected from almost 16,800 to 15,600 odd and has been now making a higher top higher bottom formation. The strength what we saw yesterday also was quite favorable, followed by a good rollovers what we have seen in the Nifty IT space as well. So in my sense, on the downside 16,250 odd 16,200 will act as a very good support, and on the upside there is a probability of Nifty again retesting its all-time high levels of 16,800 levels, and from there on to move further upside. So to me the risk reward looks more favorable in Nifty IT compared to other indices. So this can be a good bet. Among the Nifty IT space, I believe TCS and HCL Tech should be the leaders to drive the index higher.
Okay, well, that's as far as Amit's view goes. But Nirav, good morning to you too. How are you placed when it comes to markets? How are you going about this thing?
Yeah. Good morning, Agam and Navneet. Just to add to what Amit said, there was a weekly breakout on Nifty at 11,830 odd. Generally when a weekly breakout comes and, when a breakout comes above the all-time highs, we expect, that breakout to stay and, the momentum to come again. But that momentum for Nifty hasn't really come. It hasn't really closed above the 12,000 level on a weekly closing basis. Add to that, the RSI, there is on a weekly chart, there is a divergence. So that also means, somewhere down the line, we might see some bout of selling again coming in, and that bout of selling might stay on for another 2 to 3 months. Having said that, Nifty is already, still trading above the breakout zone. That is why, there is certain amount of, confusion as to where the Nifty will go first, whether it will go up or, impending downside will come. So what do you do then? Generally, looking at all the other parameters like VIX and PCR, they've all come back to normal. The PCR is around 1.3 odd. The VIX has come down to odd 15 odd. So the premiums have shrinked, and there is an opportunity here. I believe if you take the monthly expiry into consideration, the premiums of at the money call and put are around 250 odd points, and that is only about 2% for Nifty. So for the next 15-20 days till the expiry, Nifty is likely to move at least 2% in either direction. So it will be wise decision here to buy both the 11,950 call and put. The combined premium for which is around 250 odd points. You can keep a stop loss of around 50 points loss. That means when the premium comes down to about 200 points, and you can take a target of about 100 points. That means when the premium rises to about 350 odd points, looks like low risk. You can play on the delta here.
Okay, so Nirav suggesting to buy at the money monthly strikes. That's 11,950 call and put, and that's a long strangle for our viewers. A long strangle is when one buys an at the money call and put in anticipation of increase in volatility, and when the volatility increases followed by expansion in the option premiums, the strategy becomes profitable. Okay, that's about the indices, but let's also get you some stock futures ideas going. Amit, let me come to you first. In terms of individual stock futures, what are you recommending in trade this morning?
Well, I have a buy recommendation on Havells. Now, the stock has seen a good rise in the open interest since the inception of the June series, and with a substantial rise in the price. We saw the inception of the June series right from 720, 730 odd levels, and the open interest base also has been steadily rising. So the rise in last 6 to 7 trading sessions has been quite phenomenal and quite intensity, and has given a breakout above 780 odd mark. So the more it sustains above 780, the more strength the counter will hold from here on. Overall, on a broader structure, also the stock has been making a steady higher top, higher bottom formation. So that gives a good upside on the primary trend. To me, on the short-term basis, it has a very good support around 780 to 775 odd zone. And the more it sustains above 790, 795 odd, the momentum can be picked up towards 825 to 830 levels on the higher side. I have a second recommendation, which is a short idea on Divi's Laboratories. The stock has been trading in a kind of an inverted flag formation, where the stock, after giving a breakdown from and reversing from 1780 odd band, has failed to show any kind of an upside from there on. And in fact, in the last couple of weeks of consolidation of 1620 to almost 1560 odd band zone, the stock has been making a steady lower top, lower bottom formation. So this kind of structures are very difficult to see any upside in the short term. I believe on the upside, 1585, 1595 is a very stiff resistance zone. Any rally towards these will be short-lived. On the downside, the more it sustains below 1560 odd, a possibility of target towards 1520 to 1500 levels can be seen.
Okay, and Nirav, how about you? You have a strategy on one of the IT companies.
Yeah. If you see the IT pack as a whole, from the this month onwards, in fact, from the last 15-20 days, you're seeing some good built up open interest, long, buying action is seen in most of the IT stocks. TCS has broken out above a very important resistance of 2210, above its all-time highs again. So it has also confirmed a higher top, higher bottom formation. So I believe TCS here is likely to move up further, and the buying momentum should again pick up in this stock. One can buy TCS futures at current level with a stop loss of 2210 and a possible target of around 2300 for the next 4 to 5 days. The second one is a sell call on HDFC Limited. You see HDFC Limited, there looks like it is losing steam around the 2200, 2210 odd levels. There is some good volumes on the upside around the 2220, 25 odd levels in the last week. Looks like there is a certain amount of selling pressure short built up in the last week, and it is likely to come down if it does not move about 2230. Further selling pressure should come in and take this stock down towards the 2100, 2140 odd levels. So So one can sell this stock on the futures with a stop loss of around 20 to 30 or 20 to 20, sorry, and a possible target would be around 2140.
Okay, in fact, Nomura came out with a report on HDFC downgrading the rating to neutral, but they've increased the target price to about 2,300, citing higher valuations for this one. Okay, let's now address the stocks where we wanted to take view from both our experts. So let me start off with Bharat Financial. It is seen some bit of gains in today's session on back of news that they've received NCLT approval for merger with IndusInd Bank, 7.5% higher for in terms of open interest build-up, and the stock's also seeing gains of about nearly 2%. Amit, it's been trading around its 100-day moving average, but if one were to look at the returns on year-to-date basis, the stock's not done too much. Considering today's move of nearly 2%, does that warrant any sort of trade, or one should stay away?
I would stay away at this point of time, considering the recent fall the stock has witnessed from 1050 odd to almost 940 odd. The stock has managed to show some kind of a recovery, but yet to cross the comfort level of 1025 odd. So in my sense, till the time that is not crossed and sustained above that, these kind of an upside can be short-lived. Even if I look at the overall open interest, there has been a steady liquidation of long positions. The open interest has shedded from almost 50 lakhs to 42 and a half lakh odd shares. So definitely this kind of a liquidation, as well as some kind of a short covering what we have seen from 960 odd, there is some kind of a less of participation which is likely to be seen in the coming times. But however, on the downside, if it sustains above 970 odd, it will see some kind of a re-attempt to test towards 1020 odd levels on the higher side. But it is a clear buy only above 1025. Unless that is not done, one needs to wait.
Okay, well, just a little bit of an update when it comes to the ADG stocks. We will have Anil Ambani, the chairman of Reliance Group, will address media at 11 o'clock today in a conference call, and of course Bloomberg Quint will also be logging on. So don't forget to take a dig at what the chairman has to say, considering there's been so much volatility in all the ADG stocks of late. And I'm not really going to press my experts on their views on the ADG stocks, because that's clearly a tough one to call for. However, we could address the HCL Technologies, because that's the other one that we wanted to address. What we saw yesterday was an advance for the IT companies, and HCL Technologies is building on the gains. It's up 2%. There's not as much change in open interest, but there has been a little bit of strength coming here in this company. And as you can see, that little bit of a U-turn of late in the month of June. The question is, what do we do with this one? So Nirav, I come to you. How would you address HCL Technologies?
Yeah. See, last week I think we talked about the same stock. It was falling at that time with an increase in open interest. I had the same view. I said, the one stock I would be buying in IT space at that time would be HCL Technologies. Why? Because it is a slow counter, but slowly but surely, if you look at a longer term chart, it is making a higher top, higher bottom formation, continues to rise. Week on week basis, it might not rise much, but there is this 1% or 2% rise every week, or probably monthly there is another 2-3% rise, but it continues to rise, and it is likely to move up further to 1140, 1150 odd levels for this month. I believe this stock can be bought. It is low risk. You can buy with a stop loss of 1080, which is a good support area on the downside, and buy on dips as well. For the 3 to 4 month perspective, I believe it can reach the 1300, 1400 odd level. So this is a good stock to keep in your portfolio.
Okay, that's HCL Technologies, good stock to keep in portfolio, and also looking good, 2% higher, some long positions seen here. The other one is Indiabulls Housing, which has come under pressure. In fact, it's one of the top F&O losers also for the day, and I guess it's recovered from the lows that we'd seen. It did have a gap down opening today. Intraday chart will throw a better picture of that one. The stock's currently trading around the levels of 706, and you can see it's recovered from the lows as we speak. The stock has been trading below its key moving averages, and of course there are reports where the company has clearly refuted the allegations of siphoning of money by the promoters. Amit, if I could come to you, the stock had touched levels of about the recent past 2 months prior. I think it was trading somewhere about 900 levels, and from thereabouts now it's fallen to 700. Do you see more downside in the coming days for Indiabulls Housing? If somebody is holding on to shorts, what would you advise them to do?
Yeah, so if you look at on the monthly chart, the stock, since the correction from 1400 levels during the September month, since December onwards, the stock, as you mentioned, has been trading where on the upside 900 has been the resistance, and on the lower side 650, it has taken multiple supports around those levels. So definitely the trend is much weaker. I believe if someone is holding short positions, can definitely hold on to it with a trailing stop loss. The trailing stop loss, of course, will be at the higher side considering the news which is coming out. So the volatility is here to stay for this counter. So the trailing stop loss I would recommend is close to around 740 odd. And on the downside, if it violates 650, I believe there can be a steep correction from there on, where possibility of touching towards 590 to 580 odd levels will be quite on the higher side. At this point of time, a close below 715, 720 in coming 2 days will add more weakness to the counter.
Okay, let's address a very, very interesting counter, something which has very big weight when it comes to the benchmarks, Reliance Industries. We have a query from Lalit Akhare, and he has bought the Reliance Industries 1300 put at a premium of 30. He wants to know at what level can he exit. Now currently Reliance Industries is at around 1325. It's currently at around 16, which means he's making a little bit of a loss right now, but we must not forget that Reliance Industries is being extremely patchy of late. Well, reasonably volatile too, if I can call it that. But well, at least Lalit's investment has halved, considering his entry point is at 30 and it's currently at around 16.4. Nirav, how would you help him out? What's your view on Reliance Industries, and what would you ask the viewer to do?
Yeah. See, Reliance on a longer term chart is still positive, but the intermediate trend seems to be negative at this moment. There seems to be some selling pressure coming in around the 1340, 1345 odd levels, which also holds the 50-day moving average. I believe he can hold on to positions till the stock is below the 1345 levels. Once it closes above the 1345 levels, that is when he can exit the positions. Also I would suggest him to book profits if the stock comes towards the 1300 1280 odd levels, because I don't think for this month it is going to go below the 1280 odd levels.
Okay, that's the view coming in on your 1300 put strike of Reliance Industries. I want to address Bata. It's not doing too much in today's session, but remember the stock was up and about in yesterday's trade, and even on the futures side there were long positions built up as the open interest went up. So currently maybe there is some bit of slight profit booking with regard to the gains that one had seen yesterday. But Amit, if I could come to you, this is the stock which has been exhibiting strength. It's trading, I guess, just 3-4% away from its all-time high levels. Considering the flat opening in today's session, would you use this as an opportunity to create long positions here?
I hope I heard it correct. It's Bata, right?
Yes, Amit.
So yes, definitely the stock has been showing quite a lot of strength, and overall on the longer term time frame, the stock has been making a higher top higher bottom formation. Of late we saw some kind of a dip from 1480 to almost 1300 odd, but again it has given a breakout above the 1400 odd mark and has been holding quite firm. So on the downside it has a very good support around 1380. That would be my trailing stop loss for this counter if someone is holding, and on the upside the more it sustains above 1400, it can retest its all-time high level close to around 1460 odd levels in the coming couple of weeks.
Okay, that's the view on Bata India. The other one, actually the top Nifty loser today is Sun Pharma on a back of a brokerage report which is coming from Goldman Sachs. It's downgraded the stock to sell and giving it a target price of nearly 355. And precisely that's the reason why the stock may have come under selling pressure. But also remember the pharma pack on the whole has been lagging and underperforming at least in the last 1 year. Nirav, particularly a view on Sun Pharma at current levels with the cuts that we've seen, what would you advise to do?
Yeah, looking at this stock, from the last 2.5 years, the stock continues to make a lower top, lower bottom formation. The trend is negative. Also, on a closing basis, if you see, the support was around 390. 393. So if the stock continues to stay below this level and closes below the 393 level today, then very likely the stock is going to go down below the 360 odd levels. And one can short on a close, once the close comes below the 390 odd levels, just wait for the last half an hour for today, and then go short on this counter. There is certain amount of support around the current zones, and that is why shorting at this level might not be good. The stop loss once you short should be around 402.
Okay, well, on that note, we are going to conclude this F&O show. I'm going to take a moment to thank both our experts, Nirav and Amit, for joining us and taking us through their views on the markets, as well as solving some of your queries. And for more updates on the F&O space, you can also check our website out, bloombergquint.com, specifically the futures and options pages.
Well, with that, it's a wrap on this edition of the F&O show, but stay tuned to Bloomberg Quint for more news and updates.